The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com, that's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I can be reached at 631-647-4694 or at themainstreetcode.com. When we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors across the United States, financial advisors, insurance advisors, and brokers, accountants, attorneys that rely on us for financial planning and insurance advice, particularly in the areas of life insurance, long-term care, disability, and annuities. And in just the products alone, it's not just the products, it's the planning and the use of those products and in the underwriting of those products. So there's a lot that goes into it. It's not just products. It's not a commodity. Life insurance in its very self is a very complex product with many moving parts and many different types. And unfortunately, on TV and on radio, it's commoditized. It's something you just buy, and it's not all life insurance is the same. If one thing's a nickel cheaper, there's a reason it's a nickel cheaper. If something is There's reasons for everything. There's features and benefits inside every contract that make each contract unique, which is why you need to reach out to us at Main Street Planning Group, where we can help decipher what's the best thing for you. Now, one of the things I really want to talk about today is college planning. And college planning is an interesting thing because there is a program that came along many years ago called a 529 plan. And the Secure Act 2.0 had made some changes, which is the recent legislative act that went into play. And the 529 plan is a very useful tool for college planning. And the way the 529 plan works is you put money in as the owner, let's say for the beneficiary of your child, and that money grows tax deferred, and it can be used for their college or trade school later on, and it's a great savings vehicle without taxation. It does have its limitations, though, and it does have its advantage. Now, in New York State, they have a very specific plan. There's a whole bunch of different 529s. New York State, if you do the New York State plan, where you don't use an advisor, they have some funds that you can go into, and they will give you a New York State tax deduction of up to, like, say, $5,000. So it's an interesting planning vehicle, and I think it's good for some and not good for others, but they just made a recent change in the 529 plan, and that if you overfund the plan and you've had it for more than 15 years, and let's say your child or grandchild doesn't go to college, or you have too much money in the plan, it's going to allow you now to convert part of that plan into a Roth IRA for the beneficiary or for that child, if need be. Now, it does have limitations. So the annual contribution is $6,500. And so you could take out, let's say you had an extra $50,000, you could take out $6,500 today for that child and put it into their Roth IRA for that child. So there's no tax consequences in doing that. So it's kind of a cool move. I don't know how many people are overfunded or not with a 529 or don't have. It does add some flexibility. But there are some limitations there, and there's some rules regarding it. You have to be in it for more than 15 years. The Roth IRA must be the same name as the 529 beneficiary, and the rollovers are subject to Roth IRA contribution limits. Now, 529 is a tool for saving for college, and I recommend, it's a great planning tool. The limitations of it are very simple. It's governed by ownership. So as a parent, I can control that 529 for my kid. One of the other things I can do is I can reallocate it to a different child down the road. There's some really unique rules with 529s, and I could possibly get some tax deductions, and it grows tax deferred, and it's a tax-free qualification. One of the big downsides to a 529 plan, and there are a couple, is it's considered an asset for college. Now, what does that mean? When you apply or your child applies to a college, they have to fill out something called a FOSFA form. Now, on that FOSFA form, it looks at your assets. And if you have sufficient assets, you don't get college aid or need. So by having a big 529 plan, and you as the parent owning that plan, it adds to your countable assets. There are products and programs that don't add to your assets that also can grow tax deferred. One of the alternative, now, if you're a grandparent and want to do something for a grandchild and control that money for their education and donate money toward it, I think it's a great grandparents plan because the grandparent still owns it. The grandchild is the beneficiary. They could change their mind later if they're not showing the grandparent love, they're not showing them love, or the child turns out to be not college educated or just not worthy or whatever. So you can change your mind. And the grandparent could use it as their own annuity if the child, if they don't use it. So it could be a good thing. It would then be taxable to them, but they would have control. And it would not be an includable asset if the child applied for college, which would keep it out of that FOSFA application because the grandparent would own it. The child would be the beneficiary. So that's kind of a cool thing. But there's another product out there called life insurance. Now, cash value life insurance, I love in college planning, and I'm going to tell you why. The beautiful thing about cash value life insurance, as opposed to or in complement to a 529 or some other things, is you can put unlimited and flexible contributions into it. Okay? It is not counted on your FOSFA form. Any retirement, any life insurance, or any annuities, it clearly says don't list that as anything on your FOSFA form for eligibility for loans and whatever when you enter college. So this is a great asset that grows tax deferred, and you can take the money out tax-free to pay for college with no penalties, no requirements like IRAs or Roth IRAs or 529s. You can use that money, and you could take it out for college, still leave money in there, contribute later, and then use it for your retirement. So a cash value life insurance play, well structured, can be a huge play in college planning. And the beautiful part about it is, while your kids are younger and growing, and you buy this policy, and I recommend you buy it on yourself, not on the child, because what if something happens to you prior to that kid reaching college age, but you really wanted that fund? Well, it has a death benefit that's tax-free that can help pay for those colleges. So it's a multiple, I hate to say it's the Swiss Army knife of college planning, but it truly is the Swiss Army knife of not only college planning, of retirement planning, and also estate planning. Holy cow! This is the best product in the world if used right, and if the correct product is used to handle your needs. And you have flexibility on how that cash grows. It can grow with a fixed account, it can grow with an index account, or it can grow in a variable account with mutual fund-like accounts like your 529 would do. What a great Swiss Army knife tool to use for college planning that many people aren't aware of. You're listening to the Main Street Code for Financial Success. Again, if you need to reach out to me, 631-647-4694. You can look at me on the web at themainstreetcode.com. You can listen to me every Friday at 3 o'clock, and I'm on Apple and Spotify podcasts of my shows. Thank you, and we're going to be right back for a commercial break. Thanks again. Good afternoon, everyone. You're listening to the Main Street Code for Financial Success, and I'm your host, Neil Himmelstein. You can always reach me at 631-647-4694. We hope to cover topics that are important to you, and please reach out and give me a call if there's anything you'd like to discuss or anything about your personal situation or planning that you need to do. Prior to the break, we were talking about college planning and some of the tools that you can use. One of them we talked about was a 529 plan. We talked about some of the good things about it and some of the limitations. And then I talked about life insurance, what a great product that is, because you can do unlimited and flexible contributions. You can stop paying for your life insurance. You want a cash value plan. If it's funded correctly, you can take money out tax-free, no 1099s, no FOSA requirements, no reporting to the IRS. You can put money back in. You can buy a house with it, and then you can leave the money in there for your retirement. And God forbid, if you should pass away, you can gift it to your loved ones so that they can go to college, so they can live a productive life, or your spouse or your children. So it's what a switchblade of opportunity you can have inside a life insurance contract if it's well structured. Now, there are other benefits too. What if I become disabled? What if I can't work? Well, there's clauses, there's different policies that can account for that. What if I need a benefit because I have a heart attack? Well, there's clauses in some of these contracts. And that's why I say every contract, every life insurance contract has unique qualities to it, which is why you can't buy 1-800 life insurance. I'm sorry. But if you're buying online and not talking to a professional like myself, then you're doing yourself a disservice, because there's so many things that we can do for you and we can account for and help you create wealth, your personal wealth, that we can do with a well-structured plan that you're not going to get from 1-800 life insurance. I'm sorry. It just doesn't work that way. 1-800 life insurance is typically selling you a term policy that's going to start and it's going to end. And that's all they're selling you. And the likelihood of that term policy paying out is between 1% and 2%. That's the odds. That's why they could sell it so cheap. Now, can you convert it? Or you have living benefits? Can you take money out of it? No, we can't do any of those things with a 1-800 term policy. I'm sorry. And there's many companies trying to sell it to you direct. So the beauty of the life insurance policy, a well-constructed policy, is you can grow the money tax-deferred. You can take the money out tax-free. And if you die, it's a tax-free death benefit. There is no better tax treatment product in the world. For college planning, for estate planning, for retirement planning. Wouldn't it be great if when you retired that you could take out tax-free money? Let me tell you another advantage. I talked about this on previous programs. If any of you are now 65 years old and now are on Medicare, you notice that your Medicare premiums, your Part B premiums, are based upon your income. If you are retired, or you're not even retired and you're 65 and you're earning a good income, or you're taking your IRA or 401k money, all that money goes towards your income. But if you have your money stashed away in life insurance, cash value life insurance, and you're taking out tax-free money, that doesn't go towards your income, so your Medicare premiums are lower forever because you're using tax-free money, not taxable money. It's not countable money. It's not countable for college. It's not countable for Medicare. It's not countable with the IRS. What a wonderful tool to use. I know people that are real estate investors that use the cash value of, listen, they borrow money from their policy to land a house. They don't have to take out a bridge loan. It's a zero net loan. They pay it back when they want to. They build up this cash and they keep floating their money through their life insurance policies. We have political figures. John McCain borrowed $800,000 from his life insurance policy to fund his campaign when he ran for president. It's documented. What a great tax-free world. The big boys are doing it. You should be doing it too. Life insurance, a very, very powerful tool if used right, if put in the right hands, if you do the proper plan. It's not the only tool. We have 401ks, we have IRAs, we have 529s, we have Roth IRAs. But what a unique tool that has all these fantastic tax advantages. So when we plan, that's a big part of our planning. Now, many shows we talk about annuities as well. Annuities are a great planning tool as well. Anything that you can defer your taxes in addition to any IRAs or retirement vehicles are terrific because taxes take away from your performance. If you're investing in CDs or money markets, although you may be getting great rates right now, okay, and I want to talk about that as well because we've been talking about this for years, but right now you can get a short-term rate better than a long-term rate. It's crazy. So the bank says, oh, I'm going to give you 4% for 6 months. Well, that's great. What happens at the end of 6 months? Well, you got to renew. Well, what are the interest rates going to be in 6 months? I don't know. But I'm getting 4%. That's great. And by the way, you're going to get taxed on that as well. So depending on your tax bracket, that 4% could be worth 3%. It could be worth 2%. But I'm getting that 4%. That's great. You buy an annuity and you buy it for 5 years at 5%. 5 years at 5% guaranteed. You don't have to worry in 2 years, 3 years, 4 years, 5 years. And you're not taxed on that 5%. Every year is no tax. So the money just stays in there, compounds until you use your money. And you're not being taxed on that money. And then down the road, when you take money out, you'll be taxed on the growth. But deferring the taxes allows you to build up a bigger nest egg. And if you're retired or you're near retirement, it's so important to save on taxes. And it's so important to save on taxes when you retire because it reduces your Medicare costs tremendously. Okay, $200 a month, $300, $500 a month, every month adds up. It adds up over a lifetime, huge. So early tax planning and early insurance planning go hand in hand. That's my point today, is planning for college, planning for retirement, planning for post-retirement. Taxes is a big element, and not just what your accountant is doing. All your accountant or CPA does, with all due respect to most CPAs and accountants, is they're trying to save you money that year. And if they save you money that year in paying Uncle Sam, then they say, I've done a great job and I should get paid for it. You're correct. But what happens 10 years out? What happens next year? What happens 20 years out? When you sit with a good financial planner, you're going to map out your income, not just this year, but next year and the following year and 10 years from now and 20 years now and 30 years from now and well beyond your grave if done properly. And you need good insurance planning to complement your investment advisor and your CPA and your attorney who can't pull this all together. We can. That's what we do. We're going to pull your whole plan together to make sure that you have proper planning for your college, for your retirement, for your estate plan. It all comes into play. It's all one big puzzle that we help you put together. And we help you put your team together of financial professionals. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I can always be reached at 631-647-4694. I welcome your comments. I welcome your suggestions. I hope you find this entertaining, and we look forward to seeing you. Have a great, great weekend, and goodbye.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.